Trades right here on ET Now. Let's welcome on board Abhishek Bansal, CFO at Just Dial, and talk about how their quarterly numbers were. Abhishek, as one sums up the performance of Q3, tell us what's the traction in paid listings and the growth seen compared to your overall listings.
See, this particular quarter was a very robust, steady quarter for us. We look at it more on a year-on-year basis. So, firstly, starting with the user growth, this particular quarter we clocked about 134 million users, which grew about 25% year-on-year. More importantly, mobile, which now contributes broadly 80% of the total traffic, that grew about 43% year-on-year to 105 million unique users. User growth obviously is resulting into accelerated revenue growth, which came in at about 15.2% year-on-year. Margins, they continue to be extremely healthy. So at EBITDA level, we did about 25-26% EBITDA margin. In the first 3 quarters, business has been able to generate more EBITDA than what we delivered last year. And considering we got robust treasury income this particular quarter, PAT almost doubled year-on-year. So to that extent, it was a very healthy quarter. Total database as we speak has crossed about 25 million listings, and against that we had about 485,000 paid campaigns, which grew about 10% year-on-year. So overall 10% revenue growth came due to volume growth, and the rest about 5% due to realizations.
What's the revenue share from top cities, and how then has been the contribution from tier 2 and tier 3 cities? What is it that you're picking up which is affecting realizations and margins for your overall performance?
As you rightly mentioned, that inherently there tends to be a downward pressure on our realizations because the share of tier 2, tier 3 cities is growing, which have lower ticket size versus tier 1 cities. Today, tier 2, tier 3 cities contribute about 26% to our revenues and about 46%, 45% to count of campaigns. But despite that, if you see that we have still been able to maintain or grow our particular realizations, which is primarily due to certain bundled offerings that we give to SMEs. So to that extent, while realizations have downward pressure, I think the fact that we have been able to maintain our realizations and get some growth out of that, that is a big positive.
Few months back, your deferred revenue was 370 crores, which implied locking in SME clients to longer duration packages, but finding it difficult to upsell higher yield ones. Where does it stand now, and how is it this approach is working for you?
See, unearned revenue this particular quarter ended at about 379 crores, which was up 32% year-on-year. So our particular strategy of having clients sign up for higher value contracts is particularly working very well for us. So we have a two-pronged strategy there: get more particular customers at even entry level prices, which is reflecting into paid campaigns growth. On the other side, customers who have been with us for good tenure, get those particular customers to be with Just Dial for even longer duration with higher spends, which is resulting into your unearned revenue growth. So these two combinations together, I think, are working very well for us.
Thanks very much for joining us for those details, and have a great day ahead.